Control accounts.
Hello, dear students. I hope you all are doing well. In this lecture, we will continue our control account and discuss the transaction related to the topic. Now, let's move on towards another transaction. Whenever we are selling goods on credit, our debtors increase. So, journal entry is going to be debtors account debit, sales account credit. So, SLCA is not a sales account, it is an account of our debtors. Debtors increase, and in the reference you will be writing sales. So this is credit sales, and the cash sales never come in control account, because if we sell goods on cash, the entry is going to be cash account debit and sales account credit. So in a cash transaction, debtors will never come there. Debtors will always be created when we are selling goods on credit. So if we are selling goods on cash, there is no need of debtors. So we will be writing here credit sales and not cash sales, but we won't need to mention the credit sales because the account name is always sales. We'll be writing the account name that it will be using opposite to this. Now bank. Whenever the debtor pay us the money that he or she owes, we will be making bank debit and debtors account credit. Discount allowed. Discount allowed if the customer pays us money before the due date. They will be eligible for some sort of discount. This is known as discount allowed. Discount allowed is an expense for the business, so we will be debiting discount allowed and crediting the debtors account. Then we have return inward. Return inward is whenever a customer return goods back to us for some reason. Maybe the goods are not up to the requirement by quality, or maybe the design is different from what they have ordered, or wrong style, wrong color. There will be return in goods from customers. So receiving the goods back to in return inward of sales return sales return will be debited and debtors account is going to be credited. Now bad debts. Bad debts are known as irrecoverable debts. If the debtor is somehow or for whatsoever reason is unable to pay the debts that he owes to us, we'll be deducting the debtors account and we'll be debiting the debtors account, and we'll be uh, deducting the debtors account and we'll be deducting the bad debts, debiting the bad debts account, which is an expense account. So bad debts will be debited and debtors account will be credited. Now contra PLCA. What does it mean? Contra PLCA means one of our customer also becomes our supplier, which means he also owes us money and we also owe him the money. Why? Because he bought the goods from us, well, for which he needs to pay us the money, and we also bought some goods from our services from him or her, so we also need to pay him the money. So rather than he should pay us the money and we should pay him the money, we will be canceling the transaction. This is known as contra PLCA.